I mean, we're up in the last hour right now here. We're up, I'll get to it in a second. But the rally last week, as you've been discussing, has been almost a dash for trash, and you have it there in the headline. And what we've seen is that the lowest quality stocks have seen the biggest rallies off the lows. And, there's not that much you can read into it. As you've discussed a lot, that can be a dead cat rally or the beginning of a meaningful bounce. But what we have seen is in this last hour strength, 4 days last week in a row, we were up 33 basis points or more in the last hour of trading. And based on where we are right now, it'll come down to the close. But today could be the fifth straight day where you've seen 33 basis points or more in the last hour of trading. That may not sound like a lot, but the 4 days is already the longest streak since November 2008. And 5 days would be the longest streak since July 2002. So, I mean, you don't see this kind of last hour strength all that often and on a consistent basis. And November 2008, what you have to remember is it wasn't a low for the market as far as the indices were concerned, but it was an internal low for the market, meaning like the indices made lower lows in March, but the average stocks made their lows in November 2008. You saw a similar situation in 2002, in July 2002. The majority of stocks made their lows in July 2002, but the indices bottomed in October 2002. So that's an encouraging sign here. Go ahead.
No, I was just going to ask you how you read it, basically what you take away from it, and especially that pattern you noticed about what you're calling the dash for trash. So the companies that had the highest PE multiples, right, that don't necessarily have earnings, and the not quality stuff. Does that mean they're looking for a bottom?
Well, so again, it's a characteristic you see at every rally off a low, whether it's sustainable or not. Take a stock like Square. It's had a rally of 30% off a low this year, 60%, and 50% off a low at 3 different times this year. It's still down 15% year to date. So these types of rallies, you tend to see them, they don't have a whole lot of meaning by themselves. But when you couple them with some other factors like this environment, who wants to hold stocks overnight when you see the types of headlines? You have a headline risk in Russia, Ukraine, but people are still buying stocks going into the close over the last week here. So I think that's something to be cognizant of. And right now, we're up to almost 50 basis points in the last hour of trading right now as we head into the close. So I think that's a positive signal here. Everyone freaked out about what Powell said earlier today. But if you really look at what he was saying, it's not much different than what he was saying last week. We were a little confused why the market was so positive last week on these headlines. We were equally confused today why the market was so negative on these headlines when there really wasn't that much difference in on either day. Like what's changed in the last 4 days?
Well, one thing that's happening is that yields are sort of shooting higher here. The 10-year's past 230 right now, and we're looking at fresh highs going back to 2019. How do you think stocks have been able to absorb these higher yields?
So with all these things, like oil, the first time oil went above 100 in early March, the market freaked out and we sold off. This time we go back above 100 and the market was able to stick with it. We're seeing a similar thing in Treasury yields. The first time is shock and investors get worried, and then they get used to it and it goes up and the market's able to live with it. So I don't think it's we're still at 220 on the 10-year, and it's still not that historically an extreme by any stretch of the imagination.